Breaking news crossing just this moment. GDP figures. Ed Conway, I'm delighted to say, is here with us. Good morning, Ed. What's the data?
They've just landed. It's slightly worse than expected. 0.1% growth in the third quarter of the year. I mean, you know, economists had expected it to be 0.2. This is 0.1. We get a whole raft of data. So, and I'm going to bring that to you over the course of the next few hours. But the main headlines. So, growth is a bit weaker than expected. Obviously, that's going to be a disappointment for the Chancellor. It's coming just ahead of the budget. We obviously get that big assessment from the Office of Budget Responsibility about how well the economy is doing. So this feeds into the public finance numbers. Monthly growth. And what we're talking about here, ultimately, this is just how much money is the economy generating, you know, across every sector? And one of the relevant things here is this period, that quarter that we're talking about, that was when Jaguar Land Rover had its big shutdown because of the cyber attack. And we know that has borne down on the numbers. The question is, you know, the extent to which that plays into it. Like I say, I can bring that to you. But here's what's also interesting. Monthly GDP, so that's the rate at which it was growing in September itself, that contracted. So the economy actually contracted in that period. So they're just monthly numbers, and then we get that quarterly. We'll bring you more data, you know, over the course of the next few hours. But it's a disappointment for the Chancellor, I would say.
It's just this thing again, isn't it, about how they just can't unlock growth. It's just this kind of pancake-like growth for so long, just flat.
Yeah, I mean, I think it's been tepid, obviously, for a while. It's marginal if you look at any 1 month or quarter. Yeah. The only other thing, Ed, I was just going to get your view on before you dive into the data for next hour. There's been a bit of good news, not over the last day or two, but over the last 2 or 3 weeks for the Chancellor ahead of the budget, and that's on borrowing costs. But borrowing costs are down quite a lot over the last month or two. And the most important thing to look at in terms of how we judge Rachel Reeves and judge the UK government is spreads over comparable G7 economy. How much more are we having to pay, and is that gap getting wider or thinner? And actually, it's got a bit thinner over that period of time over the last couple of weeks. And most people, Ed, I speak to would say that's because the market is starting to expect if taxes do have to go up, they'll do one of the economically sensible things. They'll pull one of those big levers, not do this long tail. Whether or not, of course, the population or their MPs think that's worth the political price that comes with breaking a manifesto pledge, it is helping borrowing costs.
Yeah, no, that's totally right. It's been this one thing that I think we've been talking, you know, we've been focusing on for a lot. And we don't normally kind of spend a lot of time showing charts of gilt yields, which is what this is. It's basically the government's cost of borrowing. But part of the reason we've been doing that a lot in the last 3 years is that was the heart of what went wrong after the mini budget. You know, we saw those yields going through the roof. They have come down, and that's definitely will be a kind of reassuring for the Chancellor. But I'll bring you some more charts on that, because I do have charts. Fear not. And that spread is narrowing, so that's a bit of good news. It might be more the Bank of England than you know what the government is doing, but we'll have to wait and see.
Yeah, and also just to underline, if the government is spending less on debt, they've got more money to spend on, you know, schools, hospitals, etc., etc. Right, that's the point. Ed, we'll be having a lot more from you on the programme. Thanks to.
Can't have too many charts.
Yeah, we love an Ed chart, don't we?
Good
We really do.